The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We got to change the show just a tiny bit today. Rich Anderson is going to be our guest at 9:30, but I do not have the information from the FTSE and the DAX. I don't think they did very much, but because I didn't see an alert on Bloomberg, but we won't have any charts for those today. But I did want to start out with the U.S. dollar. Here's what was happening when it was breaking down, and if you'll remember, you'll see that 1.618 level down there. And the reason why I bring that up is because it's so close to that 61% retracement on the weekly chart that it's worth taking a look at. But we still have not come out of the woods. If you'll take a look here at this U.S. dollar index, we went down and we touched that level at 90, I think it was 92.17, I think is what it was. I'm double checking that. Yeah, I think it was 92.17. But the market rallied now for a couple of days. Didn't go anywhere. You see it's backing off a little bit this morning, but it has a chance to make a major bottom in here, folks. So I think it's important that we take a look at this. So we'll see. I'll say someone just told me what the FTSEs were doing. Not very much at all. So that's good. Thank you very much, David. We appreciate that. But I usually get it, but I didn't today. So I don't trade those. So I just bring it to your attention because several people have asked me to bring them up. So that's why. Okay, that's the U.S. dollar index. We know that it's very important. The key level on the upside in the euro is 119.70, I believe, was the high. So watch for a 61% retracement back if you can get that, and then you might be able to, get short the euro, because I still think the euro is going to break. This move down in the U.S. dollar has been accompanied by a lot of press, and that's what you like to see, because you want to get people on the other side of the market, and that's where you can get these really quick moves, to the upside, and that's what we're waiting for here to see if that's going to happen. Okay. All right, Mr. Z is telling us the last of the euro, gold, 1934 last. Yes, the fact that gold broke that bottom is very important, folks. Fact is, since we're talking about that, Mr. Z, let's just get this up here to take a look at it, because gold is at the proverbial moment of truth. That was one of the things I wanted to chat with you about this morning. And where is the chart, Larry? Here's the chart, Larry. It's right here. Get this up here. We are at the proverbial moment of truth. Let's get this up here, and you'll be able to see this is where we are. We went up. You can see the big ABCD at the top at 2090. We broke down $220. We rallied up to the 61% retracement, went a little above it. That came in at 2010. We went to 2024. We've now come down, and for all day yesterday, we went down to the 1930 level, and that's the 61% retracement. We hit it 1, 2, 3 times. We hit it this morning. Going below 1930, folks, is very, very negative, in my opinion, if we do that, because if you'll notice very closely, watch those last 6 bars that you're watching there. You'll see the bar in the middle that didn't quite make the 382 retracement. That could be really, really important, and that's what we want to find out here, because after dropping, we went from 1965, we came down to 1930. We dropped $35, folks. That's a harmonic, and what we do this morning, we rallied up to 57, which was an exact 61% retracement of that move. Folks, if you want to see how I do this, I'm going to be doing a full day show for you folks coming next week on the 26th of August, where I'm going to go through and show you how I do some of these things, because it's not very hard. It really isn't. Let me tell you one of my favorite things that I ever had happen to me, not counting the birth of my child, of course, but I happen to be friends with Wes Parker of the Los Angeles Dodgers. He and his father bought a lot of gold with me through the years, and we became very, very good friends. And Wes's good friend was Jerry West of the Los Angeles Lakers, so I got to meet Jerry West. And Jerry West's good friend was none other than Vin Scully, the broadcaster of the Los Angeles Dodgers. And so I got to meet Vin Scully, and they had always had breakfast or lunch at Schwab's Pharmacy in Pacific Palisades that no longer exists. But they had a regular old-time pharmacy, with the milkshakes and the popcorn machine and all. It was really a cool place to go. But anyway, I did a favor for Vin Scully, and he says, "What can I do?" And I said, "I'd like to do." He says, "I'd like to see you, do this for one inning." He said, "I'd like to see how you broadcast." He said, "Sure." He said, "Come on up." And he said, "You can only spend one inning." He said, "Because we have rules up here that you can't be in the booth for more than one inning." And I said, "Hey, I can understand that. And you have to shut up." I said, "It's going to be difficult for me, but I'm going to do it." So I went in there and I watched what he did. And he had these little things. He had little hourglasses. Each one of them was a 1-minute hourglass. And there were 3 of them there. And one of them said score. The other one said, I forget what the main one was, the score. Recap, and the score, recap. And what was the third one? I can't remember the third one. But anyway, I said, when we got ready, I said, "What are the hourglasses for?" He said, "This is what I do every day." He said, "I repeat every day the same thing. This little hourglass tells the listeners that the score, it's the Dodgers 3-2 over the Giants here in the top of the 3rd inning." And then he turns it over. Okay. He did that every minute. And then it was a 2-minute one for the score. And then he had another one that was for 3 minutes, and he had another one that was for 5 minutes for commercials. It was for commercials. But anyway, and he said, "I just do the same thing over and over again. And in between the time," he said, "I fill it in with stories that people like to hear about the players that I've met." And he said, "That's how I do it." And he, to me, the greatest announcer that ever lived. He was trained by none other than Red Barber of the Dodgers, and I'll tell you, he was, and he's still going. Well, he's not going strong anymore because he's in his 90s. He's got a little bit of a health problem, but that was one of my fun things, and that's what I do here today. I do the same thing every day. And none of it, sometimes it doesn't work, but when it does work, it works pretty good. So that's why I'm looking at. The key is watch this 1930 level. We break below. Let's see where we're trading here. We should have held that level pretty good, I would think. Yeah, we did. We bounced up pretty good off that level so far this morning. We got down to 33. I'll just bring this up to take a quick look at what I was looking at this morning when we got there. Hold on one second here, boys and girls. There's something wrong in Denmark. Let's get it up here. It's really important that to take a look at that. Flip over that egg timer. Z, you've got a really good idea. I'm going to do that. I'm going to get me a little egg timer, and I'll do that. But my show is only, 50 minutes or so, whereas, baseball game runs 3 hours or more. So that's it. Just a key level down there, folks, at 1930 in the gold. It is just flat, very, very important. That, to me, the fact is, that is one of the more important numbers of the day. Let's take a break. 877-927-6648.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I don't know if you can hear me or not. I think I've been knocked out of the den. Shut the front door and raise the rent. Boy, oh boy, this is not a good sign. I wish there was a way. Hey, one of you folks out there, Skype me to see if you can hear me, please, because in fact, I know I've been knocked out of the den. Why, I don't know, but maybe it's electricity or whatever it happens to be, but I'll try to get it on. I think we have a caller called Jake from Santa Fe. Are you there, Jake?
Yeah, well, yep. Can you hear me okay?
Hey,
I hear you great.
Yeah, I can hear you okay, but I've been knocked out of the den, so they can probably still hear us, but I'm not sure if we can. So you're in Santa Fe, New Mexico. I know that place quite well. Jim Twentyman's brother lives up there. Now, you asked a question about Apple?
No, yes and no. Here's my whole point. My whole belief is Apple is in so many of these indexes. They're in the diamonds, in the Dow, they're in the spiders. If Apple starts really falling apart and they really bringing it down, it's almost like your Bradley model idea is going to be hit hard in the direction that you see it. It's not going to be hit at all, because if they hold up Apple, then the markets will hold up. What are your thoughts?
Absolutely, you're absolutely correct. Apple is so big, with a hit $2 trillion yesterday, then it hit 467. It closed at 463, 464 and change. We're trading at 463.90. You're absolutely correct. Apple is in everything, and the higher the value it is, the more weight it has. So you're absolutely correct. It's going to be difficult for the stocks to go down, but also remember, Jake, not one stock can't hold up everything. I mean, even though Apple could stay up, you could still see a pretty significant correction with Apple, just backing off, maybe hardly at all, or maybe continue to go higher. That's always a possibility. Those are a cult of people that buy Apple products. I mean, they're really addicted to it, which they should be. It's a great product. But you're right. That is a big thing, and that's the only stock that I watch every day is Apple, because I know that if something happens, it'll be interesting.
So Larry, taking it a step further, they're disregarding the Russell 2000, the slash RTY, that futures area. They're getting down 15.5 points. But what I want to also say is, think about this: when Apple splits, I think it's 4 for 1. So now it's going to be trading at, I'm not going to be an exact figure, let's just say it's going to trade at $115. But people have multiplied what they owned before. 1,000 shares is now 4,000 shares. And people might be getting nervous, like, well, 1 point down is $4,000 in their account. I mean, and other people might be saying, wow, this is a good time to buy Apple. It's cheap compared to what it was. Yet there's where it's going to be a real balancing act. So what are your thoughts on that?
Okay, Jake, I'm going to give you a little lesson in thinking, okay?
Good, please.
Okay, I'm a technician. I don't think that much. I look at the action of what's going on. No, I really don't. You're a very, I imagine you read a lot and everything, but what I do is I actually just watch the price of what's going on, because that tells me that this thing is either getting weak or it's starting to shake a little bit. But I do watch it because it's between Apple and Microsoft. That's 20% of the Nasdaq just on two stocks. I think it's more than 20%. So I watch Microsoft and Apple. I watch Apple every day. Microsoft, not so much. I have some alerts on. But what you're thinking about is one of the problems that you have when you're investing is because you start thinking about everything, and pretty soon you come up with a solution. And gee, I don't know what to do next. Whereas as a technician, you're seeing a bar, and that bar, by historical purposes, is telling you whether you should be getting ready to go long or short by looking at the pattern and the ratios. And that's what I do, is I put those patterns and ratios together to see if this is a spot where I want to be a buyer or seller. I hope that helps, but I can't think like that the way you do, because it'll just cloud my thinking, and then my decision process will be out of whack. And maybe my decision process is out of whack anyway, but that's how I do it.
Okay, no, yeah. Listen, we all got our own thinking processes, and some men want to get married and have babies and children and family. Others say, "Wow, I don't want to go near that idea." So it's a give and take all over the place. But we're talking money here, and people who've got a lot of money invested in Apple might want to, when it does split, might think about, if the day comes where it's at 115 and all of a sudden it's down to 100. It's not down 15 points to them; it's down 60. So that's just my thought on the idea of maybe when Apple splits, it'll be a real interesting battle of give and take, and who's buying and who's selling.
Well, it's actually a good thinking, because when you're thinking that way, at least you have a process of what you're looking at. All I'm doing is I'm just looking at the bar to tell me what's going on. I'm not concerned about what the people are that own it or the people are that are short. I'm not concerned about that. I'm just seeing what's happening with that bar. Now, should we get below 435 in Apple, which was last week's low, that would really mean something, Jake, if we got below 435. Now, I realize that's 28 points from where we are right now, but 28 points, we covered that in a matter of a few days last week. So the markets go up and they come down faster than they go up. That's the one thing I know for sure.
Yeah, I agree. Okay, thank you, Larry.
Hey, thank you for calling in, my friend. And if you see Twentyman Brothers, tell him I said hello, okay?
All right, roger that.
All right, see you later, buddy. Okay, folks, we got to cover one other thing before we get to Rich, and that's a very important one now, and that is we have a situation that we've been watching very, very closely in Treasury bonds. As most of you know, we've been quite bearish these bonds for quite some time, and I've got to do something to make these charts a little easier to grab, because I've grabbed the wrong one and I can't find it. This is not good. I wish, here it is. It's just hidden from me. There we go. Let's get this up here. We've got to move quickly because I've only got a couple of minutes. Folks, we've had a big move off of the resistance at 183. We came down almost exactly to the 382 retracement. We came down to 4.42. And for 5 days, we have gone nowhere. The key number to watch is 179.22. We're trading at 179 and change now, I believe, because if we can't get above that and it starts down, look out, because that means something's happened to the Federal Reserve's program, and they are not going to be doing what they say they're going to be doing. And that's just looking at the charts. The fact that we're having this little time, this is what we call a dead cat bounce in technical terms, a 5-day rally that doesn't even cover a 1.5. That is very bearish in my opinion. This could change. By the time this shows started or over, we could be up at 180.5 or something, and this would all be wrong. But watch that 179.23 very closely. We'll be right back with Rich Anderson, folks. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with my good friend and one of our favorite folks here at TFNN, Rich Anderson. How are you doing?
Doing great, Larry. Good morning.
Still living the dream there in Minneapolis?
You bet. Beautiful day, sunny.
Hey, what's happening with the rioting and the protests over there, Rich, and the police department? Any news on that?
Well, that's all ancient history, that the thing was they wanted to defund the police, but they put it before a commission, and the commission said they need more time to study it, therefore it won't be on the ballot for this year. And, the people that want the police the most are the black community when they took a poll. It's the liberal whites that think they know better than everybody else that have other ideas.
Okay. All right, that's enough of politics. Let's talk about the corn market. What's going on? We've had a nice rally. We rallied just about 50 cents a bushel here, up to the 61% retracement now in the corn. Do we have a chance of a bull market this year with weather or something like that, Rich?
Well, the only major weather was in western Iowa, and that's where the Pro Farmer has their crop tour, and that's where they were yesterday, and they'll be in eastern Iowa, and they'll be in Minnesota. The two groups will be today, and then tomorrow they'll announce their yield. Basically, we have a bumper crop coming in a lot of the areas. It's a good crop. The Derecho, or whatever, that big wind that we had, kind of an inland hurricane type of a situation, they say might have gone over as many as 8 million acres. But there's a whole lot of difference between wind-damaged corn and wind-blown corn. The USDA has announced that they're going to resurvey some of this stuff later in the year to try and get a better handle on that. I don't know how many acres that is. But what we're really talking about is we've got a pretty big crop coming, but we have much bigger demand coming. The key difference between this coming year, when we have the demand, and last year is, keep in mind, a year ago or more, the Chinese depopulated because of the Asian swine flu a population of hogs equal to almost the total population of hogs in the United States. So then, without that animal numbers that needed corn and meal, they didn't have a real big incentive or need to buy our grains. Right now in China, their corn prices are at multi-year high. And actually down in Brazil, because the next new crop of saffron corn hasn't come in yet, their prices are very high. There was actually talk yesterday that a couple cargoes of beans that were purchased by China and Brazil were switched to the U.S. So we've got big crop and big demand looking at it. And then the other thing is the dollar. Currencies make a lot of difference. If I'm sitting over in a foreign country and I'm buying from the U.S., I'm buying and paying in dollars. Well, when the dollar was so strong, even 6 weeks ago, things were a whole lot more expensive than they are now. So yeah. I often chart, not only in terms of soybeans, like anybody would look at a chart, but then I'll throw up the chart in terms of the Brazilian real, or in terms of, the euro, to see what the buyers of the world see what that chart looks like to them. And it's often much different. It's, just one of those little things I do.
Yeah, one of the little things you do in quantities of millions. Folks, Rich is the only one that sleeps less than I do. Let's take a look at the soybeans, Rich, because they've had a really strong uptrend. We had a really nice bottom back there on August the 8th, and we've had a pretty strong 60-cent rally. We took out the highs of July, which nobody thought we could do. And this market looks like it's got a lot of power. Is that also, I'm sure it's related to the Brazilian real because of the crops that are down there.
Absolutely. The dollar, I think, probably bottomed yesterday. I mean, you had sent out the dollar chart the other day, and the comment I made to a couple of my buddies was that it looks to me like it'll find support and reverse, much like the wheat did when it was on the low. So the charts look relatively similar. The demand, we're going to come into harvest, and we're going to have the peak amount of supply at harvest. That's just a truism. There's no two ways around it. The only thing that would change that if there's too much rain and they can't get it harvested, but eventually get it harvested. So that's why you typically see some weakness in the harvest. Just like we have first notice day tomorrow. On August 31st, we'll have first notice day in the grains. Well, the commercials can play that game, but the rest of us can't, so we all have to get out before then. And that's why you often see weakness in the first notice day, and then after that, you see strength again. But the supplies are relatively limited of what can compete against us in South America right now. And so the potential exists once we get through the harvest that we could see some pretty decent prices in beans because the Chinese animal numbers are back up. They've sold most of their excess. They were selling rice and wheat. They've sold most of their excess stocks, and they're going to be coming to our markets. We canceled the president canceled the meeting we were supposed to have with the Chinese on the 15th. Mark Meadows, the chief of staff, mentioned something on the 18th, but the Chinese Commerce Department said we're going to have meetings with them soon. They want to keep this deal going because they don't want the $250 billion of extra tariffs. So, things are going to get worked out. There's no question about that.
Rich, we have a question about ethanol and corn. They're saying it's the elephant in the room. Is any truth to that?
They say, I missed the last. They say what?
That regarding corn, that ethanol is the elephant in the room. Is there a possibility of that?
Absolutely. In fact, I saw some really good ethanol charts and I almost emailed them to you from International Ag. I'm sure that Mark would let you, maybe put those up on your site. But that's one of the demand problems in the United States. Gasoline demand right now is 10.5% below pre-COVID. My car's getting like 6 months to the tank.
I'm the same way.
So I'm much worse. But between the planes, the jet fuel demand is way down, and that falls down to corn demand and ethanol. And the margins just haven't been there. The margins were so bad that they shut down a bunch of the plants. Now they've restarted them. Margins are fractionally positive, but not much. But yeah, the demand is very poor, and it's going to remain poor. And until we get everybody back to work and people feel comfortable traveling.
Hey, stay with us for one more segment. We got a caller from New Jersey has a question about open interest. We'll be right back with Rich Anderson, folks.
All right.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management, and we're talking, I believe, with Jeff out of New Jersey. Are you there, Jeff?
Yes, I'm here. How are you, Larry?
Very good. Why don't you go ahead and ask your question to Rich?
Okay, thank you. I've been looking for a chart online of ag futures open interest charted over time, a time series of open interest, but I can only find open interest for 1 day at a time, not charted over time. Would you know where I can find that?
I'll tell you what. I'll get back to Larry, and he can send you something. I use CQG. I've used CQG since the company started, and it was a Tandy computer with a 16K chip in it. And I pay, But I will find an answer for you and get it to Larry. I'm sure I know there are lots of places, but let me get back to you on that.
Yeah.
And there's something to that. The CME Commitment of Traders report comes out every Friday, but I know what you want, and I'll get you an answer. I guarantee you.
Yeah. Jeff, all you have to do is email me, Jeff, Larry Pesavento at gmail.com. And when I get it, then I'll be able to attach Rich's stuff and send it on to you. How's that?
That's perfect. Actually, Larry, I don't know if you remember, I emailed you a few weeks ago with the same question, and you suggested we ask Rich Anderson. So that's why I'm calling in. Good. But I'll send you an email, as a prompt. I will get it done. No worries. The two things that, gold, there's two things that I would mention, because I know show is limited. One, you had asked about lumber. Well, lumber's gone parabolic. There's this huge movement out of the cities, and, builders are going crazy. They're looking for where can I find more lots to build on. And we have this little problem with, transferring back and forth from Canada. A lot of our lumber comes out of Canada, so things have gone parabolic. I personally wouldn't participate in that market. I had a friend that made a lot of money in that market, and then when it got limited down 16 days in a row years ago and couldn't get out, and, his account went in the dinger big time. But if you look at the charts gone parabolic, I think the dollar's the story, that there's going to be pent-up demand. Eventually we'll get this thing moving. Jeremy Siegel, Wharton, he's also, he's famous. For the first time ever, he's recommending gold in his portfolios. He works with some mutual funds. Who knows which ones they are? He walked but that's a huge change. Warren Buffett, if we were at, the gold price was at incomparable levels, gold would be 32 or 3,300. We're going to have pent-up demand. We're going to get this thing figured out. and the Fed's going to allow for inflation because that's the only way we're going to get rid of the $3-4 trillion worth of debt that we're adding on. Depending, I believe that the Democrats and the Republicans will finally compromise on some kind of a bill, and that will be helpful. So that's my 2 cents on gold. I'm not a real big gold guy like a lot of people, but I believe they're going to allow for inflation, and that inflation will get rid of our debt, and that will help lift gold. The only thing that would stop the gold from being a player is if interest rates got a bunch high, but I believe the Fed will continue to keep interest rates low for a very long time, and with the increase in inflation, that looks as good as anything, gold and silver.
Okay, Rich, Jeff just hung up, and we had another caller coming in, but there was a little problem. What's your feeling on copper here, Rich? We had a big move above the old highs, and Dr. Copper, you've always talked about that. Does that suggest a lot more strength?
It can easily have a pullback, just like there's pullbacks in markets. Actually, as I see the copper, it wouldn't be unusual to pull back and retest the early August low. I'd like to see a 38% retracement of the whole move for March. I mean, if you had got on the stock market or any of these markets when the copper started to take off, you'd have been on the markets on the long side late March, early April at the latest. And I think we're due for a 38% correction in everything. I mean, you've got the elections come up. There's plenty of things that will hamper things. So I think the next push up will be the compromise and something getting done in Washington. And then you'll see the technicals, and we'll have the normal correction. And that will be the time and the opportunity in a lot of markets, in this beans, the stock market, copper, gold, silver, these are just normal ebbs and flows, and that's why you look at the technicals. That's why you look at the technicals. You look for the SWOT. Your floor trader's handbook, you focus first on risk, and that's exactly what you wrote in that book, and you did a great job there. And then you look for areas where you want to watch, and then you look for your triggers to execute, and you execute systematically, knowing that the probabilities are in your favor, but nothing's 100%.
That's for sure. The main thing you said this morning, from my perspective, that Siegel is going into the gold market. I met him back when I was in Chicago, and he was nothing more than hogs, cattle, and bellies. He wouldn't even think of anything else.
This is the Wharton School of Economics, Jeremy.
Siegel.
He's
from Philadelphia. Yeah, okay.
Yeah,
Jeremy
from
Siegel.
Philadelphia. Okay. That's George Siegel, the pork belly trader. No,
George. Yes.
And George, I haven't checked to see what those guys are trading these days, but this is somebody that's even in a bigger world. In the mutual funds with billions of dollars that they advise to.
Yeah. And thanks for alerting the folks on the lumber too, Rich, because they can really get hurt there, because that's really an illiquid market. That thing can turn on a dime and hurt a lot of people. So
I know. And the other phenomena that we have going on, Larry, is all these Robinhood traders. They don't have any place to bet on the games. The games are finally starting. The footballs are going to start. Maybe not in college, but the pros will. The basketball's kind of a weird deal because half the names you don't recognize. Equal and Justice. Who are these players anyway?
Yeah.
So they've been playing in this market. That's their form of gambling. Some of them will stay. A lot of them will leave when these other avenues for sports betting open up, and they're just momentum guys. And the getting lumber out of Canada is a problem right now because the borders are kind of closed, and COVID will eventually be taken care of one way or another, and we'll get back to life as we know it on the greatest country.
So. Hey, Bubba, I want to thank you for joining us today. You and Lisa stay safe, and I'll give you a call later this afternoon like I usually do to recap. And Great talking to you, Rich. Thanks a lot, my friend. We really enjoy
You
having
bet.
you here.
And I'll get you the information on open interest.
Okay,
I'll do that
forward
right
it
now.
out to Jeff in New Jersey if he sends it on. Oh, we got a
And I
break coming
sent
up
you
here.
something on
So we're having-
ethanol. I just sent you ethanol.
Okay, thanks. All right, we take a break. We'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the market, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to alert you to one of the major bank stocks, J.P. Morgan. This comes from across the pond over there to one of our super technicians, Mr. Boz. And if you'll notice here that we're in a downtrend for sure, going back to February. We had a beautiful Gartley, almost an exact 61% retracement. It was just spot on there at 116. We're now trading at 98. But what's interesting here is if you look at J.P. Morgan over the last 3 or 4 weeks, we made a beautiful Gartley highlighted by that fuchsia-colored triangles that are there. And we backed off. We're down 7 days in a row now. And this looks like it's getting ready to break down to the level of about, as you can see, about $82, which is down $16 from where we are right now. So watch the movement of JP Morgan. If we get below 96, that's going to spell big trouble for this stock, and it could easily start to go down. It's one of the bigger stocks in the financials, as you know, and so along with Goldman Sachs and a few others. But this is going to be really interesting to see if this actually is going to break down like we think it's going to. That's the main thing. The other thing, folks, is about the Bradley model. We made a possible turn yesterday, and I reiterate this again. It's a possible turn. Sometimes when I'm going to put up the old from the last couple of years, but when it hits right on the money, you have to pay attention to it because it's usually good. And we hit it spot on yesterday with the NASDAQ making a higher high than the previous day by 1 point. Can you believe that? 114.38 to 114.37. I mean, that's really a big sign of some little distribution up there. So we'll watch it. The key level to watch today, from my perspective, is to watch the level of 3,300 in the 30. Let's get this correct, Larry. At 33.83. If we get above 33.83, that would be the sign that maybe the Bradley model is going to fail. But right now, the Bradley model is in vogue because you had a big move down, had a little bit of a bounce this morning, not unusual. So we'll see everybody tomorrow. 877-927-6648.